The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, there we go. Welcome, everybody, again to the Diagnostic Trading Hour, where traders come to maximize leverage, limit risk, and be one step ahead of the markets. We got the S&P just up a couple points, along with the Russell, and even got the Dow, up 28 points. We're looking at oil; it's up a couple dollars, so it actually is moving quite a bit. And the currencies are pretty stable. Big mover today. We got corn going nuts, and we're going to talk about that some today. And what I wanted to look at for you is to show one of the sort of the trading adages that you hear a lot about stocks can also apply here. Buy on the rumor and sell on the news. And if you check this out right here, this is corn today. And what happened was corn flew up based on all the expectations that the USDA ag reports came out and that they were going to be really bad. And they did come out and it did show, hey, there's going to be a lack of supply out there. They think it's going to be one of the worst crops in 25 years. At the same time, they also said that there's a lot lower demand on feed, a lot lower exports expected. So putting all that together, literally it came out. They told them what the news was here in the morning, and as soon as all that came out, it just started flying it down, and just traded a great opportunity to hop in and trade the markets. And there's a lot of different ways to trade corn, but one of the ways is to trade either the futures market. Also, another way, of course, is to trade Nadex, and we're always talking about Nadex on this show and different ways to trade it. If you pull it up, you can actually see that they have the corn binaries. They've actually extended the trading hours on them now, and you can go over here to corn. And you can see what the opportunities are and that are currently available. And right now, it's below the floor. They have just fallen. But you could have got in this morning when it was at 740. You could have got in when it was at 750, and you could have rode it down. Even the big dailies right here, man. Right at 750, could have rode it all the way down to 720. So there's a lot of different trades you could have made. You also, one of the big things highly recommend that you check out is on the week of the ag reports when they come out. And you can always go over to the USDA.gov website and all that stuff and get all the details on the ag reports. But when they come out, you can check out on that week. Want to look at what's called the weekly binaries. And you can go over here to corn under commodities and weekly binaries. And you click on weekly, and then right there you can have options that you can go in and you can sell. And they have just a great risk-reward scenario where you can go in and there's just a lot working for you and in your favor. And, like this example right here, if you could have got in like at $15, if it fell below that, then you would actually be able to go in and make, as much as $85 on that trade, as long as it closes below that before the end of the market on Friday. But you can trade these ahead of the announcements before they come out, expecting volatility. And what I like to do is I like to go and I like to straddle. And so I'll go in and I'll sell a lower binary and buy a higher binary. Now, I know some of you are like, what is a binary? Binary really is very simple. It's always a $100 risk-reward trade. And if you go to Nadex and, if you haven't opened one yet, I highly suggest you hop on. Just try it out, check it out, see how it works. Click on Log On. They're a U.S. commodities exchange, and, they're registered with the CFTC, and just a great place to trade. You go over here, go to Log into Demo or Create Demo Account. You click Create a Demo Account, and you just put in your username that you want, your first name, last name, phone number, email address, hit Apply for Demo. Instantly, you're going to get a password. Literally takes less than a minute, and you can actually log on and start checking it out and seeing how it works. And so you go over here, and once you got your account and you've logged in, they'll give you $25,000 of funny money. You can start playing with that. And if we go in and we look at just, what is a binary? How does it work? Well, a binary is very simple in the fact of it's a true or false statement. We talked about this a little bit yesterday on our show. And you're saying that this statement is true, that the September, and this is very important when you're looking at a chart, is if you want to look at it exactly, part for part, you want to look at the September corn chart, not the December corn chart, okay? So the one that it says right here, September corn chart, and it's going to follow the full September contract for the price. And when you're looking at this, you go, okay, so what does this mean? Corn September is going to be above 748.50 at 3 o'clock. If you thought that was true, you would buy it. If you thought it was false, you would sell it, okay? And, of course, the further away it is from that price, the more profit potential there is. And you can get in and out of it anytime before expiration. And you go here and you can check this out and sort of see how this works by just clicking on the charts. It's one of my favorite things to do. And you can look at historically just how did the trade, flow today. And you can see this morning when it opened up here, it was like right around, 10:30 when this trade opened up. that you can see that you could have sold it for $70. Okay, so you'd had a $30 risk, a $70 profit potential, and right now you'd actually be up about $50 on the trade. And so a very, low risk, high reward potential trade. And the big thing is, corn literally can just, it can just move. And I was watching it today as I was trading it, and I actually noticed, you saw corn moving literally like $4 or $5 at a time. Within like a second, a split second. And so that could be really scary to trade something like that on the futures market with that massive leverage. What if it moves 10 or 20 points on you? And like I said, we were looking at the chart earlier. I don't know if you noticed that bar, but it just flew up. And if you were in the wrong direction when that happened, then that really could hurt you. It could hurt your account. And so you definitely want to be aware of how can I limit my risk? How can I maximize my leverage? And so when you're looking at that, look at these charts, check this out. This flew up right there. We break this down. We'll just look at 1 minute charts just to see how fast it moved this morning. And this is literally in 1 minute, so probably literally in less than a minute. If we broke it down and looked at tick charts, this thing just literally, went from 728 to 745. If you were in this thing short, then, you would have got just killed. So, however, if you were in, trading Nadex, you wouldn't got killed because you actually have a floor, you have a ceiling, or you have the binaries. So you can go in and go, you know what, I think the market's going to go down after it flies up, and you short it, and you get to take advantage of that. So definitely check those out. We're going to be putting up some new videos on the TFNN website here within the next couple of weeks. You're going to be able to check those out and see exactly how it works. Now, when you go in, just place your order. And again, if you want to see how they work, look at the chart. It really helps. But when you click on your order, what you'll be able to see is, let's say if I wanted to place the trade thinking that, maybe corn's going to retrace, okay? So, if we go back, I'm going to back up on the charts a little bit, make it a little bit easier to see the action today. Let's say this, you were on here and you were drawing like a Fibonacci retracement line, and you put this right here. And for whatever reason, you thought, before corn closes out, say this gap right there. So before corn closes out, maybe you think it's going to come back up. And so you can come over here and go, okay, well, if I think it's going to come back up to, say, the 50% retracement line, that's about 723.25. You can go over here, 723.5. And you could buy the binary. You bought the binary, you'd have an $18 risk, and you'd have an $82 profit. Notice it's always $100, okay? So whatever your risk is, your profit is the difference between your risk and $100. So $100 minus 18 equals an $82 profit potential, okay? So that's a way that you can take advantage of the binaries. Also, if you think you're at a major support or resistance level, if you think there's no chance in the world it's going to go that way, you can flip it around and go the other direction. Now, this would be more of a neutral trading strategy, meaning you think it's going to go down, stay flat, or not go all the way back up to 723.50. If you thought that was the case, you would actually make 750. So obviously, but you have a risk of $92.50 if you flip it around. So if we go like right here, we go sell. Then you have a risk of $92 and a profit of $750. So this is more like, if you're thinking like an iron condor, iron, albatross, where it's just really spread far out, collect some premium. A lot of times on flat market days, I love to go in and I'll sell ones that are 20 or 30 points out where I have maybe a $30 risk or a $30 profit potential. Now, obviously, you would not want to wait until this thing, wiped out $92 when you only made $750. So you need to have a good risk management plan in place. An example of that would be if I came in and let's say we were looking over here. Let's check out something a little bit more flat today. So corn is just moving like crazy, but just check that out. It's a great way to trade it. We're going to go here and we're going to get the 1 to 2 o'clock. So they expire at 2 o'clock Eastern time. And actually, I'm going to pull up the binaries. So on the left side here, you'll notice you have bull spreads, you have binaries, and they group them by their groups of forex, commodities, indices. We go over to binaries, and I go over to US 500 and click on 12 to 2. It's going to show me all the ones right there for the spreads and the binaries. So spreads here, binaries here. Once I have that, I go, what do I think is just a good level? Do I think it's going to get back up to 1336.6? So if I think that's a false statement, okay, then on this trade right here, I'd lose $53 if I'm wrong, okay, and I make I'd lose $47 if I'm wrong. I'd make $53 if I'm right. And so you can go in and go, just how can I maximize profits on this? I don't think it's going to be, if you thought it's going to be above 1332.6, you could buy it. And, profit $21, loss $79. Well, I don't really think it's going to be above 1332.6 in the next, 45 minutes or whatever. So I decide to sell it. Now let's check out my risk, okay? So I have, a risk of $21 and I have a profit potential of $79. So, I can go and I can really just take advantage of these trades and, like I said, this great risk-reward potential. And this is sort of a way to collect time premium, to collect, decay. And one of those things is to get paid for time. That's one of the, option traders' favorite things to do. Now, this isn't just like an option, but a binary is definitely an option. Okay, the bull spreads are a lot different than the binaries. But you can go in and you can put this trade on thinking that, hey, you know what, I think the S&P 500 is going to be less than 1332 or equal to 1332.6. And if I'm correct, then, I make a nice profit on the trade. So check that out. Look at that. And, anytime you think you have a good support or resistance level, it's a great way to collect time premium decay. Think about that. Anytime you're collecting time premium, okay, which is basically what you're doing here, then you don't have to worry about whether it moves far enough, right? Your only concern is, does it move too far against you? So if it starts shooting back up, you may get a little bit concerned. Or, if it stays flat, that's great. If it comes towards you, you're a little bit concerned, but you got all the way up to 1332.6, or really 0.7 before you can lose on the trade. So it gives you a huge range. You can take advantage of that. And let's check it out. I mean, that's not necessarily a great trade right here, but let's check this out. Let's pull up an S&P 500 chart, and let's look at the different possibilities of what you could do, okay? So I'm going to go over here. We're going to switch this over to the S&P E-minis. We're going to be looking at the current contract. We want to make sure we look at the September contract. And again, you'll know what contract that is simply by looking at right here, US 500 September. So, the market's trading right here, and looking at it, it's like, what, this is probably a pretty good support level. And you can even sort of, look back there and see what do you think's going to happen. So if I think the market's going to be above this price, okay, or below this price, I can place different trades. And, let me take advantage of those trades. So I could literally place that trade as long as it basically moves up or stays flat, I can profit from the trade. So let's check out another trade on here and just sort of see how that looks. We'll look at, let's say you think it's going to stay below 1340.6. All right. And again, this is just a very short time frame. So we're talking expiring in the next 40 minutes. If you think it's going to stay below that, you can sell one of them. So let's do that. Let's go ahead and place our order. Okay. And we're collecting time premium here. All right. So we place the order. We have a 1350 risk, or a 1350 profit, 8650 risk. And again, you have a higher risk, but you also have, in a sense, a higher probability, because as long as the market stays flat, goes down, or goes up, as long as it's lower than 1340.6, then you actually can make money on the trade. Now, do you want to risk all of that money? Probably not. I know I don't want to go in and I don't want to risk all that money. So if the market gets up to the price where the market's at right now, basically the binary is going to be priced right around $50, okay? So you could get out of the trade if it gets up to your price and just take that loss and just, put out another one and another one, another one. And the idea is to put on a lot of different high probability trades. So we're going to be coming right back. Make sure you call in and we'll be available for you. So we'll be talking to you soon, and we'll be right back on the next segment.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome everybody. Looks like we got a caller, Gary, are you from Tampa, and have a question about the U.S. small caps. You there?
Yeah. How are you?
Hey, I'm doing great, man. How you doing?
Good. I'm just playing around with a practice account, and
Awesome.
I kind of answered part of my question, which was how can I follow the number where it's at? So I see that listed with all of the other markets. So basically what I was looking at is like the 2 o'clock.
Okay, on the spreads or the binaries?
On the binary.
Okay.
Binary.
All right.
Sorry. And
no worries, yeah. Okay.
788.20, I think it is, right?
788.20, that's right. Correct.
Okay. So if I was to play a sell at 1, it would be, is it 56.50 right now? Is that?
Exactly.
So I'm
yeah, if you wouldn't
hoping
hear
it closes under the 788.20.
Exactly. Or under or equal to. So if you're the seller, it's under or equal to. So I mean, yeah, you're right. So but if it goes above it, then that doesn't happen. So you can go on here and you can basically place the sell. And what you're saying is, I think it's going to go, basically, and the market is, looks like it's moving down right now on the Russell here. And so yeah, basically what you're doing is you just go in there, you put your trade in. Right now it's at 50-50. Okay. So you basically have a 50-50 shot. And if you're right, at least I guess more than half the time, then you come out ahead there.
When I played it, it was 58.42 max profit, max loss. I already placed the order a little while back. Yeah. So basically, that's it. That's your max loss, and that's your max profit.
Exactly. You're 100% right.
At 2 o'clock, does it automatically close out? Do I have to close it out? How's that work?
You can close it out now whenever you want to. So if it got to, say, up to, say, where you're up, $25 on the trade or something like that, okay? Then you could actually close it out immediately, or you can let it go all the way to 2 o'clock. If it goes to 2 o'clock, what will happen is it'll settle out at the price at 2 o'clock. And basically there's a settlement formula they use. All the information comes in from Reuters, and what they do is they take the last 25 trades, and they get rid of the top 5 and the bottom 5, so there's no weird spikes, that mess the price up. They take the average of the remaining 15, and then that's the settlement price, which is pretty much going to line up with what's on your chart. I really haven't ever seen any kind of discrepancies. Like I said, it comes directly from Reuters, and they use the same formula every time, and they round it all the way out. So as soon as they round that out, let's say it settles out at 70, 88.0, okay? Then what's going to happen is you're instantly going to see not only the $50, or $58 will return back to your account, but you'll also see, or how much was it? $58 when you sold it?
Yeah.
Your risk? Okay.
Correct.
So if your risk was $58 when you sold it, then you'll see the $58 return back, plus you'll see the remaining $42 go into your account. So you'll actually instantly, and it's sort of I'd say with less than a minute, but usually a few seconds, you'll see your balance change right here.
Okay, so basically the trade cost me the $42. And then I'm trying to make the 58.
Okay. Oh, yeah. So, yeah, exactly. So you'll see your 42 come back, and then you'll also see the 58 come back. Right.
Okay. Is there a fee on top of that or no?
There are exchange fees. There's no broker fees because you're trading direct with the exchange. It's like sort of trading direct with me. Okay. So since you're not going through a broker, you don't have to pay any commissions. The exchange fees range anywhere from 25 to 90 cents, depending upon the volume of your trade. I think 1 to 10 is 90 cents, and then once you go 11 to 20, I want to say it's 75 cents. And it goes, like I said, it goes down to 20. I got 50 trades, or 50 or 51 above that. It's going to go down to 25 cents. So it's, you're talking to, $1.80 round turn if you're just doing, say, one contract. Yeah.
Yeah, I figured I'd get the ball rolling and ask some questions. That's very helpful, and I'm just going to keep an eye on it and listen to you.
Yeah, definitely check it out, and I appreciate that. And also, just for, fun, you can also see one of my favorite strategies. If you think the market's going down right now, because the market has to close below that price. If it closes above it, it can hit you. But you can look at 1792.2, and if we go here to our chart, that's above, a couple resistance levels that we got. And we're only talking 32 minutes, okay? So again, now this is a higher risk trade, but it's a premium collection trade. So it's one of the things you only make $12, you'd be risking 88, but as long as it stays below this level right here, you make money. So you sort of put the probability in your favor, but you put but you have higher risk. So, and you're willing to take higher risk when you have higher probability, but you obviously don't ever want to take higher risk when you have lower probability. So both of those are interesting ways to do it, and it's really cool in the right when they come out. Because what you'll notice is here, in the next half hour, there'll be a whole other set come out. Okay, and you'll be able to hop on, and over here, you'll see the actual 2 to 3s pop up. So right when they come out, they're going to be right at the money, and you could actually buy one below it and sell one above it. And you can even, if you want more range, you can also look at the dailies. Okay. And you have a lot more options. So thanks for calling, and look forward to talking to you again.
Thank you very much. Bye-bye.
Hey, you bet. All right, have a great day. All right, we'll be right back with our next session. Make sure to call in with any questions that you have. 1-877-927-6648. And again, the non-U.S. call, if you're outside the U.S., 727-445-1044.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome back, everybody. And thanks for Gary for calling in. Again, if you have any calls, just go ahead and give me a call. Let me know. I want to help out with questions you got. I know this is a brand new product, and a lot of people are just trying to learn how to trade it, but it's a lot of fun to trade. And the greatest thing is you have a limited risk. So let's check this out. Gary was actually just talking about he got in at $58 on this spread. Or not the spread, but the binary on the U.S. Small Cap 2000 here, the Russell 2000. And it's following the September futures contract. And what he did was he sold the spread, or sold the binary. And he said that, okay, I'm going to sell this binary that says that if I sell it, I'm saying this statement's false, which means it's going to be less than or equal to 788.2 by 2 o'clock Eastern. Okay? So he sold it for 58. And so if we go in there, we're going to look at that, sort of what was that risk reward. We'll put 1 on there. We'll put 58 on here. And so what that gave was a $58 profit potential with a $42 maximum risk. Okay, so at least he has a greater than 50-50 risk reward potential, and it doesn't really have to move far. It really could just stay right where it's at, and he would be just fine. And so when you have flat days, or even volatile, like if it's really, just fast, choppy up and down, or it's flat, these are just great trades to do. You can take a lot of advantage of them. And so what I like to do is, we can look at that now that we understand it, and we pull the chart up, and we look now over here at this and exactly how it works. So, okay, well, he sold this over here, and he sold it at 58. We'll see how the market's moving down. And so what's happening is it's going down in price. So he sold it for 58. Now he could buy it back for, say 46.50 or whatever, depending upon if you're looking at the bid or ask. So we can actually go in here and we can change the settings on the charts. And since he's short it, he'd be buying it back. He could actually change it to, showing the ask price. So now you can actually see where he could buy it back on the chart. You can put it at bid, ask, or, the mark, or the mid, okay? So now he knows he sold it at 48. He can buy it back. And you can literally, a lot of times, you don't have to wait till expiration. You can get in, let it move, make 10 or 20 bucks, and do another one, and do another one, and let it like literally go in and make $10, $10, $10. Now, of course, you can do 10 or 20 or 30 at a time, depending upon your account size, how much risk you want to take, things like that. But you don't have to wait for the entire move. And again, a new one comes out every hour that lasts up to 2 hours long. So as soon as this one's over, there'll be a new one coming out. And, just watch as it's moving down, all of a sudden that binary. Now he can buy it back for 42. Now he can buy it back for 41.50. Okay? So it really is just a fun way to trade. Once you get on it, like these binaries are very addictive because they're so simple. Just the $100, is it going to be above or below the price, And you get on there. And, just make sure you have a lot of fun with it. Make sure you understand, though, one of the big things that's sort of attractive that I think sort of catches people sometimes is they'll go over here and they'll look at, wow, 792.2, and they'll want to buy that. Because they're like, I'm only risking $6, and I can make $93.50. Make sure you have a reason to believe it can actually get above 792.20 in the next 24 minutes, okay? Because even though that risk reward is potential, your probability is really low that it's going to climb all the way up, okay? So, again, great risk reward, but, lower probability. I mean, the market's going to have to move a lot, and it's going to do it in a very short period of time, okay? Now, if you're coming in maybe before a news announcement, that can be a great trade. Or like I was talking about the ag reports on corn, that'd be a great time to do out-of-the-money binaries if you're buying them. So, going into lunch, well, what usually happens at lunch? You actually start trading these after 6 o'clock, and the binaries open back up. Well, what's going on? You got like Asia, and usually the markets are very flat during that time. That can be a great time to go in and sell some binaries. So when the market's moving, that's a great time to buy some binaries. And when they're really close, it's interesting how volatile they'll get. And you'll actually see them. I mean, it's literally up. Like if they're right on the line, if they're right where the market's at, you'll literally see them just fly up and down. And so you can go in and you could put a trade in saying, hey, you know what, I'll buy this if it gets to, $20. But then you can go take profit back at 40. And the thing just starts bouncing up and down, and you can put trades in over and over and over again. So, to start playing with them and, put them on, and again, just have some fun with it. And having fun with it is really the best way to learn how to do it because you're in it. And if we go here and look at this US 500 trade, we put this one on. This was an example of selling a binary. And let's see here. Pull up my chart so you can see that. And let's see, we have TF up right now. Let's go ahead and switch this over to the S&P 500, trying to keep everything up so you can see everything on one screen. And so while that's loading right here, we'll go in and look at this position. And, one thing I like to do is, you can go in, you can change your display, you can also save your layout and, get rid of things that you don't really necessarily need on your open position, okay? So you don't care when you traded it. I mean, you traded it. It's there. So, get rid of that. So we put this trade on. It did not really have a lot of profit potential. It only had a $13 profit potential, okay? We're up $5 of that $13 right now. So we're getting really close to, where it, is going to potentially max out in profit. And the market would actually have to retrace all the way back up to 1340.6 here in the next 20 minutes before we could lose on the trade. So, sort of cool. You actually get to see how it works, see how it flows. And again, you can go in and you can always check out the charts and, just see how it works. So the charts are very, very helpful for getting the price movement. Now, on the bull spreads, I know those are really new. So let's go over and check those out, like the small caps on the bull spread. So we're just looking at a trade for the binaries on the small caps. What's available on the bull spreads for the small caps. So let's check that out. I'll pull that chart right back up for us. And you can see right here, you got ones that expired at 2, 3, 4, 15. You have dailies. These actually started like at 6 o'clock last night. Okay, these started this morning, 8 a.m. Eastern time this morning. And they're all going to have different strikes and widths. Okay, now the longer they are till expiration, the wider they're going to be. Okay, so notice this one's only 2 hours long, 70 points wide. That's 70 points. Really, it's ticks. I'm actually going to be updating that. It's going to be 70 ticks, okay? So $70 in value in the spread. Now, notice we go down here, 8 a.m. to 4:15, that's 200 points wide. Daily, that's 300 points. So they're wider the longer they have till expiration because it gives it more time to move, which gives you more profit potential ability, and you have more time to get that profit. So if you're going in and you're looking at it and you're like, okay, the Russell right now is at 787.8. What's a good trade? How do you figure out what a good trade is? Well, of course, you're going to be looking for one of the first thing you're going to look for if you're just in here is you're going to try to find one that is either close to what's called the floor or the ceiling. And so if I'm looking at this trade on the US 500, then I can see my floor 783 and my ceiling 790. And just to show you a visual representation of that, go into drawing tools, and I go over here, and I can choose rectangle. And now I can draw literally 790 down to 783 over here. And that basically is my box, okay? So this lets me know how close am I to it. I'm pretty close. I'm only a couple points away. If I want to sell this trade right now, I'm only going to be risking 27. I can only make 43, but I'm only risking $27. So I have a 2-to-1 risk reward if it gets down to, about 2-to-1 risk reward. If it gets down to 783, which, is only a 5-point move down. And, based on the way the market's moved so far today, that's not, impossible, but it is in the next 30 minutes. So you got to figure that out. Now, what happens if it expires right here at the price I sold it at? Okay, that's one of the big concerns. People think, well, if it expires at 787.3, then am I going to lose all my money? No. Okay, binaries, it has to be a true or false. All right, it's an absolute. Was it above or below it? Spreads don't have the true false. Okay, so if it expires, okay, if the S&P 500 at 2 o'clock is at 1787.3, then you'll get back your $43. Okay? So, because basically it's like buying and settling out at the exact same price. So I can sell it right now, do whatever I want. Now I got to decide, is that the best trade for me? Okay, this one has a low risk on it. It's $24. That's not bad. And I go, well, is there a better one? Because this one actually gives me, it's the same width. Okay, it's still going to be a $70 wide spread. And where am I getting that $70? If you come over here and check this out, you'll see where it says $47 and $23. So it's actually $70 if you add it together, 47 plus 23. Okay? So looking at that one, I come over here and go, this one's also 70 points wide, but I have till 3 o'clock. All right? So since I have till 3 o'clock, I have more time to be right. And that's one of the big advantages of choosing a further out expiring spread, is you have more time to be right. And I go, is there a better opportunity over here? I got this one. It's a little bit more risk because there's a little, you're talking a couple dollars, okay, because there's a couple dollars of time decay in there. But now, I'm only risking 28 to make 42 if it gets down to 783. But I have until 3 o'clock Eastern, okay? So I have more time to be right. The other one, I only had the next, 15 minutes. So I may choose this spread over the other one just because it's basically the same risk reward, but this one gives me more time to be right. Now, what if I go down to the other spreads over here? So we got 8 to 415. Now, these are going to take on more risk because notice how the ceiling is higher. It's up at 795, okay? So if I want to take on this trade right now, then I'm looking at a $73 risk, but now I can make $127, okay? And I go, you know what? Maybe I do or don't like that one, and I have another option. I have the daily. Okay, you have what's called the master spread. That's the big one. But the daily right here, and I go, okay, well, what about this one? Well, that one's also up at 795. And why are both of those at 795? Where do they get these prices from? Do they just make them up, or or what? So we're going to go over that, exactly how that works. But what I want you to really see, and this is one of a big mistake I see traders make. Notice how this is 8 to 415. This also expires at 415. Often, your ceilings are going to be at the same price. Look at this, 795, 795. Okay? The thing is, this one started at 6 o'clock last night. So therefore, it's worth more money. Notice it's 300 points wide. So what I'm going to do is I'm going to add both of these to just a watch list real quick. And I want you to see the comparison so you can see what you'd be giving up if you chose the wrong spread. So we're going to add this just to, my watch list here. You go in there, you click add to watch list. It pops up, and let's see. It's taking a minute here. All right, well, there's another way to do it. I'm going to tear off the ticket. That'll be fast. And I'm going to go over here and go here, and I'm going to tear off this ticket. Okay. So now what we have is we have both of these expiring at 415. Tore off the same one. Hold on one second. There we go. Okay. So we got both of them right there. They both expire. Now look at the risk. It's the exact same, 787.8. So I'm going to go ahead, I'm going to say, if I want to sell this one, and I want to sell this one, I want to do one of these, and I'm going to do at the current market price. I'm risking $72 on both trades. They both expire at 415, okay? Both of them. But this one is a wider spread, 765. So I have a $100 more profit potential by choosing this trade, with no additional risk and the exact same amount of time to be right. So always, whenever you're checking out like the last one in the day there, like the 8 to 415, always check the dailies also because they're wider. And if the strikes are the same price, You could have the same, maybe less risk if it's a lower strike, but you're basically going to be looking at the same risk and a better trade. So, why would you give up $100 profit potential? There's no reason, literally, to trade this spread. This would be your trade right here. If you're choosing to go short and you're trying to choose between the two, you would want the one that has more profit potential. So now one of the questions that often comes up, and we'll go over here and we'll look at, say, the 2 o'clocks as an example, okay, is, where do these strikes come from? One, they're always the same width, and they tell you that right here, okay? So these are always going to be 70, ticks wide there. So they're always going to be the same width. Where do they come up with that price? How did that happen? So if we come over here and we check it out, we got 790 to 797, okay? So, and we got, notice this, 790 down to 783. And what they're doing is they're actually going in, and right before this trade started up, so at noon, or I guess it'll be, let's see here, 11 o'clock my time, and I'm going to put this over here on just a simple, like 5-minute chart, okay? And show you exactly how this works. So I'm going to go over here, and it started at 11 my time, and look, the price was like right here at 790. Okay, so what they did is they said, okay, they're 30 points wide. Basically, they're going to be $3 here, or whatever, 70 points wide. It's going to be $7 on the Russell 2000. So I'm going to go in here and I'm going to draw a rectangle just to show you how this works. So drawing tool, rectangle. What they're going to do is they're going to go in and they're going to make a spread that's where the market is, and they're going to take it up 7 points. Okay, $7 there, right? So we go up there, we got one up to 797. And then they're going to also take one, and they're going to make it, and we're going to do another rectangle right here. And they're going to make one that's 7 points below. So 790 down to 783. Okay? And then they're going to take one more, and they're going to straddle the market. Okay? So we're going to go in here, and we're going to go to, again, rectangle. And we're going to choose basically 3.5 points above, 3.5 points below. Okay, so 7 points total. So 793.5 down to 786.5. All right, so they have these 3 different boxes. So you got one here, and one here. Okay, they all expire at the same time. They're all the same width. And it's always based on where the market price is. Basically about 10 to 15 minutes before that spread starts trading, they'll post what the strikes are going to be. So there actually is a rhyme and a reason to it, because when I first started trading this, I'm like, where are they coming up with these strikes? And, how do they come up with the widths on the strikes? What they do is they look at the normal volatility in the market, and that's how they based how wide to make the strikes. And a lot of people go, why do they have this middle rectangle right here? What's the point of the middle rectangle? And the reason that they're doing this middle box spread is so that way when the market moves down, you have the potential to profit on, now buying it. Or if the market moves up, you can sell it. You don't have to be in the middle of this spread. So it actually gives you trading opportunities because, right when it comes out, you're going to be right at where the market is, right? So you can buy and you have a great trader. You can sell. You can straddle. You can buy and sell. But if it drops down in the middle, then you're like at a 50-50 risk reward on a spread. And I want a lot better than a 50-50 risk reward when I'm trading a spread. So I come in here and I hit sell on this one and notice, I have obviously a lot better than a 50-50 risk reward. I have an $18 risk, a $52 reward because it's the lower spread. But that's how they come up with the strikes. And if you ever have a question about that, just let me know. Call in. Also go to Range of Markets, and you can go over to contract specs. I'll bring that up here in a second and show you exactly how to find the contract specs and how that works so you can know how they're going to do the strikes. All right, we'll be right back after the break. Make sure to call in with any questions you got. Looks like the S&P is up a little bit and the Russell is down a little bit, and we're just moving along in the market. All right, we'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, welcome back to the show. And one of the things I did want to show you is that there is a variety of time frames. A lot of times people got them and they go, these are all short. You have the 2-hour ones, but you also have 6-hour, 8-hour, and even have 22-hour ones. So right here, if we look at the small caps, there's actually 4 of the spreads that came out right here at 5 o'clock Central, 6 o'clock Eastern, and they go all the way to the end of the trading day. So it can be long as 22 hours and 15 minutes till expiration. So it's really whatever trades you want to do. It's all for basically day trading, but that can be late night trading, overnight trading, and intraday trading. And you can choose any one of them that you want to. So yeah, definitely there's some short ones which using them right can definitely take advantage of that. I love the longer time frame ones, but depends upon again what strategy that you're using. And let's see here, we got a couple questions. Oh, who's on the other side of the trades? That's a great question. So you're looking at these trades, and all these things are going off, and who's filling all these? Well, basically, Nadex is an exchange. They're not a market maker. Okay, so they're not the ones in the sense they're basically just passing your order through to someone else, which is good because you're anonymous. So basically, the other person on the other side doesn't know whether you're buying, basically whether you're getting in, getting out, winning or losing. And you really want that. You want that, being anonymous because you have a big position. It could really hurt you, So you're anonymous because you're going through the exchange. On the other side of the trade, it can be either other traders or can be one of the contractually obligated market makers to make a market. And so if you go in and you actually see trades on the other side, then you'll know that there's also other traders over there. But you'll see traders, you'll see market makers on the other side of the market filling those orders for you. And the market makers are very big, and they basically have the ability to pass off risk through different markets throughout the world. They do a lot of contracts in a lot of places. Binary is very new to the U.S., but they're not new to, the rest of the world. So they've had them for a long time. Now, these binaries are different than most binaries. Most binaries out there, what actually happens on them is you go in and you have maybe like 15 minutes till expiration. I mean, these are long. These have like 2 hours and 22 hours. So you have like 10, 15 minutes till expiration, whether it can be above or below where it's at right now. That literally is your trade, okay? And you can't get out. It's get it, hold it for 10 minutes, and see what happens. And then what they do is they have like an 80% payout. So you put $100, they're going to give you back 100 plus 80. The most you can make is 80%. So if you're right, 50% of the time, you're going to be down. So it's really interesting how that's how most of them work out there, and those are bucket shops. They're over the counter, whereas Nadex is actually an exchange registered with the CFTC, and there's just a lot of security in that, knowing that. And know that they're not on the other side of the trade trying to figure out how to manipulate the market to mess with you. Their only interest is making sure that your orders get filled and helping you with that. Let's see. Any other questions, definitely call in. So we're available. I'd love to go over them with you. And, there's a lot of things that you can do. But, again, check out all that goes on with the market right there and how you have that much time to be right on the market. And, again, one of my favorite trades, and I think we'll go over this tomorrow in more detail, is I'm going to go into how to hedge using the spreads. So this is how I actually usually trade. What I do is I go in and I buy or sell the futures or the Forex spot contract, one of the two, and I go in and I actually hedge. So I'll actually buy the spread to help me get, you're talking a risk of $100 on, with a $1,000 or $2,000 stop loss. So I'm going to show you exactly how that works. And what I do, and just a little quick teaser for you, is you go in here and if you look at one of these boxes, we'll get rid of this. We'll zoom in and sort of check it out here. We'll get rid of this one, and we'll get rid of this one. Okay? And so sort of a quick summary on the trade here is you can go in, and you can go short, and we'll do this on the Russell. Okay? And you could go short the Russell because you think, hey, it's about to move down. But, the Russell could be a very volatile instrument. Every single tick on the S&P, or not the Russell, but the Russell futures here on ICE, it's worth $10 a tick. So you go in, you actually buy the spreads and sell the Russell. And there's a trick to make it work and make it do it right. I'm going to show you that tomorrow on our show. Make sure to tune in and make sure to call in tomorrow. And I'll be here to answer any questions you have. And if you haven't already, hop on tfnn.com and click on the banner on there and sign up for your free Nadex demo account. It's only $100 to fund a live account. I'll see you tomorrow.